Good day traders, welcome to the Forex Board Trading Academy, and today we will continue the GBP saga where we will have yet another currency pair GBP related, which is pound versus the New Zealand dollar. But before we start, I would like to remind you that information in this video is for educational purpose only. And if you haven't subscribed to the channel, you can do that right away. And don't forget to click the notification bell to follow the videos we do every single day. So what is so interesting about the pound versus the New Zealand dollar is obviously this rejection that has occurred just recently, in fact, just a few hours ago. What we had is the simple uptrend trend line, which has been rejected along with the downtrend trend line, which has been broken at this stage, then price corrected down and rejected it. This could be, in fact, the beginning of an uptrend, a trend reversal or a strong corrective move to the upside. Nonetheless, there is a strong resistance formed at 1.9030, which previously was the support, and then we see that there were at least 4 rejections of this level, including the one occurred just an hour ago. So clearly this is an extremely strong resistance to watch, but if it gets broken, the probability of a strong move will become extremely high. So what the price has to do in order to confirm it, break above, then we need to hold the previously established low and potentially this low. We can produce spikes here, it's possible in the worst case scenario. Although if we break lower, I would be very cautious for the uptrend because it's likely to go down. But the key support, of course, it's at 188.95. So as long as price remains above, there is no breakout on the hourly chart, I think there is a good probability that the trend might be starting to reverse. If price will break above, the next move will be towards the 1.91 resistance, which is confirmed by 50% Fips. Not only it is a technical, we can see it's also a psychological resistance because it's around number 1.91. This level is also extremely important because of these rejections that we saw previously. At least 1, 2, 3 big rejections occurred previously. So at this level, we might see some fight between bulls and bears where price will consolidate. If it reaches there, we might see a correction down to this support before the trend goes further up. So this is the first key resistance to watch, but then price could be breaking to the upside slowly, and if we see the break higher, then the next target that I see, the next key resistance is located at 1.9267. Yet again, this corresponds to these 2 rejections where we see the resistance formed previously, and besides it's a 88.6% Fibonacci retracement level applied to this move to the downside. And finally, we saw the clean rejection, which was the 200 simple moving average. So this is a clean rejection. I will just remove the exponential so you will be able to see. Yes, clean rejection, and this makes this area yet again extremely important. But don't forget, there is another rejection which occurred right there. Could be yet another level to watch, because this could be also the resistance. So we can see on the way up there are multiple obstacles for the pound versus the New Zealand dollar, although I do still expect price to move up as long as this low holds. Even from the current price, the risk to reward ratio seems to be quite good considering we are aiming for the 192.66. Yet we will need to see whether there will be bounces of any of these resistance areas. And as you know, we already have multiple pound pairs analyzed, and it's time to get back to them and see what has happened and compare it to the pound New Zealand dollar. The most correlated would be pound Australian dollar, where we actually see quite a strong move today. This support area did hold, there was no breakout, and I think this could be massive. Based on the pound Australian dollar, the target here is 670 pips away from the current price, and for the pound New Zealand, this is much lower. We have only 270. This means that even this resistance can get broken and price could be going much higher. But of course, if this analysis will become the reality. Moving on to the pound versus the dollar, and here we did hold the support and price started to move up. Now the nearest resistance is seen at 137, which is psychological level confirmed by 2 fips. Then we might see the next resistance at 1.4, extremely strong psychological level, and I think it could be tested in the long run. So based on the current price, we might be expecting 570 pips as the final target. So this more or less corresponds to what we have on the pound Australian dollar. And the next one is the euro versus the pound, where we see yet again the rejection has occurred today from this strong resistance area. And this could be this beginning of the move. From what I see, I did expect the price to go down from this level with this cycle, but the most important cycle obviously was this one when the price started to move down. This correction right now could be providing another opportunity for sellers, although we might be yet to consolidate up until the next cycle, which will occur on the 5th. In 4 days from now, there could be this trend that will be starting. I don't think the price will be going sharply down on the next fib cycle. It will hit the support, although it's possible. I mean, it's forex market, price could be go very sharply to the downside. So this is only one of the scenarios, the least probable, although probable. What I do expect is actually the move to the downside, and we will hit this support, potentially the final one at 0.8612 on or around the 17th of December. And this is about 2 weeks from now, maybe a little bit more, but we are looking potentially for the 360 pips from the current price, which is quite huge for the euro versus pound. So as long as we hold the resistance, it will remain a downtrend. So this is the long-term view, and I do think that there is a good potential for this downside move, huge downside move. Next one is the pound Swiss franc. Well, yet again, we started this cycle, should be bullish, and as long as we hold this low, it is likely to move up towards our resistance at 78.6 pips, which is 384 pips. And that's probably going to be more, considering that what we have on other currency pairs, this is the nearest target. It basically corresponds to what we have on the pound New Zealand dollar analysis for today. So here we have 380 pips, and pound New Zealand we have 270 pips. Well, even the pound Swiss franc has a bigger upside potential, which means that there is a huge potential overall on the pound pairs, and the pound could be gaining throughout the next couple of weeks. Next, we are left with Australian pairs, which is Australian Japanese yen. On this pair, I do expect the weakness of the Australian dollar, so this could be the big move, maybe not, but there should be some sort of correction. This is the same from what I do expect from the Australian versus the dollar. What is important to watch is this resistance, which hasn't been broken today. We see we're very close to psychological 7700 resistance area. As long as this high here holds, we should be going down. Maybe it's not a downtrend, as I said, but a corrective move I do expect from this currency pair. Australian versus the dollar, same. I do expect the corrective move, maybe not strong, but all in all, it still is an uptrend as long as we hold above this low. And yes, we might be spiking lower below this area. Most importantly, I think if there will be a break and close on the daily time frame below this support 72.53, then we might see a much stronger decline. And based on the pound Australian dollar, where the upside target is 650 pips away, I mean, pound probably will not move that much without the help of the Australian dollar weakness. Australian Japanese yen and Australian dollar could be feeling quite weak because of the Australian dollar itself. And the last pair we have is the dollar versus the Japanese yen. What I don't like is obviously the break above the resistance. Let's go to the 4-hour chart. On the hourly we had this breakout, but still we don't have it confirmed on the 4-hour time frame. So this channel is still valid. It hasn't been broken, meaning that there is still a downside potential for the dollar versus the Japanese yen. Expecting still the move to the downside. It could be fast as well, but based on the Fibonacci cycle, which is just in 2 days. So in 2 days, we might be having a 130 pips move to the downside towards the 103.00 psychological support. So that's it, guys. I hope you enjoyed it. That was all our analysis that we have currently. And as you can see, Australian dollar weakness is expected and the pound dollar strength is also expected. These are the two major tendencies that I can see, which should take place or might take place during the next 2, 3 or 4 weeks. Thank you all for watching and till tomorrow.